Hello, welcome to the Real Estate Market Watch. I'm Bob Gibbs, and this is the 14th of April, 2010. And today I wanted to talk to you a little bit about the market. So one of the most frequently asked questions to me is, how's the market these days? Are we pulling out of it? Is the market still going down? A lot of people are expecting the market to continue to drop and fall off the cliff, and other people are saying, well, I think we've hit bottom. And so what I've done is I pulled a bunch of statistics on both Alameda and Contra Costa County, basically the East Bay. And what I wanted to do is share with you what I found. And so what I've looked at is the last 2 years. So the period of time is from March 2008 to March 2010. And basically just kind of let you know what's been going on in the market. So I have some charts here I'm going to show you. And you can make your own determination where we're at. We're at the bottom, the top, the middle, sideways. First one I'm going to show you is actually the median sold price per month. These are homes, single-family detached homes in both Alameda and Contra Costa County. You'll find it very interesting. If you look at this graph, what we see on this side here, that's March 2008, and that's the median sales price for homes in Alameda and Contra Costa County. You can see how high it is. This trends down, as you would expect, over the last year. This is where we're at in January 2009. So down, and then we started going back up. So here's where we're at today. This is March 2010, with last month, basically. So we saw a distinct downturn, then the market actually started rebounding. And now it looks like it's kind of flattening out. So you can kind of make the conclusion based on this that, all things being equal, this is probably the bottom. But time will only tell. So that's with the median sales price. Now I'm going to show you actual month supply of inventory on the market. Again, single family detached homes in Alameda and Contra Costa County. And so new graph, March 2008, and this is the supply of inventory on the market. And this is where we are in March 2010. So not much inventory in the market. And what we were seeing here was more foreclosures on the market, a lot of short sales, and people just desperate to get their homes sold. As more normal resale homes took their homes off the market or decided not to sell, we saw these numbers come down to a point now where most of the people selling either are people that need to sell because they're being transferred, or for some other reason they have to move up, move down, family situations change, or they're short sales or foreclosures. So inventory is a lot less than what it was in March 2008. In fact, we're 76% less than we were at that in 2008 today. Now, if you look at the number of contracts, number of homes that are actually sold, this is very telling. March 2008, this is how many homes were selling at that high price point. At the lower price point that we're at now, look at how many homes are selling. Things have just spiked up dramatically. So what we're seeing, and what I'm hearing from people that are actually buying in today's market, we think prices have gone down enough. They've been watching that same curve that I showed you in the first slide, where it looks like things kind of bottomed out and starting to come back up. And they're looking at it as a very strong buying sign right now. So if they were waiting for the market to bottom out, they saw a signal that it was time to buy. What we're also seeing now is a number of days on market, average days on market. So again, March 2008, homes were on for a long time, and you can tell that a lot of homes did not sell during that period of time. Here's where we're at today. Homes are selling pretty quickly, especially if they're priced right. We're seeing in many cases multiple offers, which is helping to move that price curve back up that we saw in the very first slide. So days on market, March 2010, days on market, March 2008. Very distinct curve down on this. There's really no arguing this. In fact, every one of these slides I showed you are very telling in that there's really, it's hard to make an argument that goes against this, because this is the data. This is what we're seeing. So, is the market bottomed out? Based on these slides, you'd have to say yes. We're on our way back up. What I actually expect to happen is, as you've seen in the first slide, I think we're going to see a pretty flat period the next couple of years. There might be a slight upward tick or a slight downward tick, but there is a lot of inventory. People are calling it shadow inventory these days of homes that are have distressed mortgages, and that being people aren't making their mortgage payments and the bank has decided not to foreclose on them and try to work things out. That stuff's going to have to get sorted out eventually. So that I think that's going to put pressure downward, even though there are a lot of sales. I think we'll see more inventory coming on the market, as we've seen in these graphs, and I think that's going to keep prices fairly flat. Here's the other thing to it. The government has spent a lot of money trying to soften the fall in a recession to keep us out of a depression. I find it highly unlikely that they're just going to take their hands off and say we're going to let the economy fall wherever it falls. I think there's going to be a lot of government influence and interaction in the economy over the years to come, and we are, in my opinion, are going to see some pretty flat pricing for the next few years. So, is it a good time to buy and sell? I say yes. I think right now is a great time to sell. I mean, people can still, and buy, because people can still get interest rates at a fairly low rate. Because the government has had such a hand in what we're doing, there is the expectation that we will start seeing inflation kick in sometime in the future. No one really knows for sure exactly when that's going to be, but it will have to come to pay for all the money that we've printed over the last couple of years. But what my opinion is, again, I think we've hit bottom. There may be a little bit more room we can go down, but you can see prices have actually come up, and I think we're going to be pretty flat for the next few years. So I have all this data, and I can share it with every one of you. So just give me an email, bgibbs@rockcliffe.com, or call me, 925-984-3992. As always, we have our website updated with new blogs and videos all the time, www.therealestatemarketwatch.com. And as always, we're here to help you realize your real estate goals and dreams. Have a great day. Bye.